Most of the money advice you were raised on is flat wrong. Not a little wrong. Actively keeping you broke. And here's the part nobody wants to hear. It is not malice. It is just outdated wisdom passed down from a generation that bought houses on one income and retired on pensions. The world you are actually living in runs on different rules. Here are 11 lies your parents, your teachers, and probably your favorite finance book told you. Lie 1: a house is always a good investment. Sometimes. Often not. Add property taxes, insurance, maintenance, mortgage interest, and the opportunity cost of your down payment, and a lot of homes underperform a simple index fund averaging around 7% a year. A house is a place to live. Treat it like one, and if it appreciates, that's a bonus, not the plan. Lie 2: debt is always bad. A low-interest mortgage on an appreciating asset is not the same as a 24% credit card balance. Lumping them together makes you scared of leverage that could actually help you. A mortgage refinance at the right moment can free up hundreds of dollars a month. That's real money, not magic. Lie 3: you need to cut lattes to get rich. The coffee thing is a distraction. Your rent, your car payment, and your insurance premiums move the needle 100 times more than a $4 drink. Focus on the big 3 expenses. If you can shave 15% off any one of them, you just funded your entire savings rate for the year. Lie 4: pick individual stocks if you want real returns. Professional fund managers can't beat the index consistently. Around 80 to 90% underperform over a decade. You, at your kitchen table, researching a stock on your lunch break, almost certainly can't either. Buy the whole market through a low-cost index fund and stop pretending you're Warren Buffett. Lie 5: saving money is enough. Here's the crazy part. Cash loses value every single year. $1 saved in 2015 is worth about 70 cents now. Saving without investing is slow bleeding. You feel responsible while inflation quietly eats your savings account at 3 or 4% a year. Lie 6: student loans are always worth it. A degree in a high-demand field like software, engineering, or nursing pays off for life. A degree that costs $100,000 and leads to a $40,000 job is a financial trap. Do the math before you sign, not after. Lie 7: credit cards are evil. Your credit score is one of the most important numbers in your financial life. A bad one costs you on your mortgage rate, your insurance premiums, even some job offers. Used carefully, a credit card builds that score and pays you cash back on spending you were doing anyway. Abused, it ruins you. The tool is not the problem. You are. Lie 8: retirement is decades away, so don't worry about it. Every dollar you invest in your 20s is worth roughly $10 at retirement. Waiting 10 years to start can literally cut your final nest egg in half. You might think you'll catch up later. You won't. Compounding punishes hesitation harder than any tax. Lie 9: rich people are just lucky. Some are. Most build wealth through aggressive saving rates, smart investing, and owning a business or real estate, often paired with a term life insurance policy so one bad year couldn't wipe the family out. The patterns are visible if you bother to look. Lie 10: a 6-figure salary means you're rich. Not in 2026. In major cities, after taxes, rent, and student loans, $100,000 a year can feel like barely getting by. Income matters. Savings rate matters more. A teacher saving 30% retires wealthier than a tech worker saving 5%. Lie 11: you'll start when you make more money. No, you won't. The person who can't save 10% on $50,000 will not save 10% on $100,000. Lifestyle creep will eat every raise. Start now, at whatever percentage you can. 1% is better than 0, and you'll be shocked how fast that 1% turns into 10. Here's your homework. Pick one lie that has been running your life. Challenge it this week. Run the actual numbers in a spreadsheet, not in your head. Most people never question the financial scripts they inherited. You just did. Try this specific exercise. Open a blank spreadsheet. Column 1: your current monthly spending by category. Column 2, what a wealthy version of you would spend in that same category. Column 3, the gap. Automate moving that gap into an index fund the day after each paycheck. You will be shocked how fast that single system outperforms every productivity hack and budgeting app. That is how wealth actually gets built, one honest decision at a time, repeated quietly for a decade.